We all expected Trump to usher in booming markets, prosperity, and green candles for all. During Trump's first term, he based his success on record-breaking stock markets and how wealthy Americans had become. Bitcoin was supposed to go to the moon.
That's one small step for man.
We had hopes that we would even eliminate capital gains on crypto, and it turns out he just eliminated all the gains. There's Rupert over there. Good boy, Roops. Guard dog. Vicious. So what is going on here? Well, it turns out he changed his mind. He's chosen to flip the script and do things differently this time. No more instant gratification Trump. No more Trump pump. Not yet, at least. I'm convinced that Trump has a trick up his sleeve. But in order to get what he wants, he's got to deliver a little bit of pain first, and we are feeling it. So in today's show, I'll be breaking down his new strategy towards tackling America's problems, what this means for the markets, and most importantly, our Bitcoin and altcoin bags. Now, guys, this is not meant to be a political show. I'm going to give you pros and cons of what's been promised, what's been delivered, and what the expectations are. We're going to get a balanced show because I really wanted to get to the bottom of this. There's all these talks about tariffs and income tax and, the Trump pump and all these kind of things. So I've been genuinely confused. At the end of this video, we're going to go through a really fun exercise that uses AI, Grok, the most brilliant model so far, to go through an exercise of some assumptions based on some of the policy changes that have been made and the policy promises that are promised, and using a little bit of AI wizardry in order to create some other assumptions of things that I might have been missing. This is actually a really cool exercise that took me a while to do. So guys, if you appreciate me putting this effort in to make this video for you guys, you know what to do. Do me a favor, destroy that like button, subscribe to the channel if you guys are new. Welcome. My name is Chasse. Been in this industry for 13 years in crypto, trying to bring you guys the facts as I see them. Additionally, at the end of the video, another important thing that I want you guys to pay attention to, because what's happening in the current markets right now, I don't think are exactly correlated to what everyone else expects. So stay tuned for that. It's at the end of the video. This is an important one, guys. I'm really looking forward to sharing with you. It took me a while to make. Let's get into it. So this is President Trump back in 2019, and let's listen to it.
Thank you very much. I just want to say that we have a new record stock market. We just hit another record today. That's about 119 days out of the administration. That means not only 401ks and everybody making a lot of money, but it means a lot of jobs. And I know that doesn't mean much to you people, but it used to be important. If you remember, it's all about the economy, stupid. But you don't think about that too much, but I do. I think about it all the time. So we just hit another record. And it's a big record. The market's up, I guess, over 300 points today. And the economy's doing well. Throughout the world, the economies aren't doing well.
And he talks about other countries. So that's really what, his administration is based off of. His campaign was a lot based on that, reflecting back on his prior administration and how well it did for Americans. And as Gel over here says, the last time Trump took office, kicked off one of the craziest rallies in crypto history. Bitcoin rallied from $1,000 to $19,000. Shitcoins went crazy, and even ETH rallied from $10 to $1,400. Imagine those times. Now, this is a really interesting chart that was created over here. And of course, it's, at this point, we're all speculating, but this red zone is when Trump enters office. And right here is when Trump is entering office. So you see it had a correction, after he enters office, and then leading into, after a little bit of time, a parabolic bull run. But what is the current situation right now? And as the Kobolesi letter says over here, stocks are falling like the trade war is officially back. The US dollar is falling like the trade war is over. Crypto is falling like the bear market's just started. Treasury yields are falling like rate cuts are back. Oil prices are falling like we're entering a recession. Gold is falling like we are on track for a soft landing. This is simply a rush to sidelines, and we'll talk about that more, but basically there's just a lot of uncertainty in the market. And to show you some perspective here, since Thursday, not crypto only is suffering, you've got tech stocks, specifically, of course, MicroStrategy, heavily correlated to Bitcoin, down 23%, Palantir down 20%, Tesla down 13%, Intel 12%, NVIDIA 11%, Broadcom, Amazon down 8%, Meta down 7%, Google down 5%, and Microsoft down 4%. Right. And again, we are heavily correlated to the stock market. Donald Trump, from his Truth Social posts, Elon is doing great, but I'd like to see him get more aggressive. Remember, we have a country to save, but ultimately to make greater than ever before. MAGA. Now, to give you guys some perspective on what we're looking at here, this is the US debt clock, and currently $36.5 trillion in debt. Government spending right now annually is $7 trillion. And income right now, it puts us at a deficit of $2 trillion a year. This is the goal. This deficit is what we want to close the gap on. And at least in the interim, hopefully in the next 1 to 2 years, we can stop the bleeding, stop the US national debt from increasing, and at least stop that. That would be great. And that would be a big goal achieved. At the end of the video, we're going to go through an exercise, like I promised, that will let us know if what's been promised so far, if that's actually achievable. Big things to take a look at. As you can see, this is why markets are freaking out. They have uncertainty, right? This administration is by far the most radical as far as making changes. Really, the rest has gone unchanged. I mean, for as long as I can remember, there's never been anything like Doge that's coming in, cutting government workers, cutting government spending. It's always just increased spending. And that has led us into this crazy position where America was going into debt that was going to be forever unrepayable, especially with interest rates high. It was looking impossible to repay that. And we're going to talk about the long-term treasury yields in just a second here that affect that greatly. A lot of people are speculating that the reason why the markets have so much uncertainty, which is true, is because people are afraid of tariffs. Now, my own personal opinion on tariffs, especially reciprocal tariffs, I don't understand why people think that this is necessarily a bad idea. I mean, it's literally like, if you tax me 5%, I tax you 5%. If you're taxing me 25%, and then I say, okay, I'm going to go tax you 25% also to be fair. And then you say, well, we can't afford that. And then they say, okay, well, how about we drop our tariffs to 5%? And then US matches that with 5%. So to me, that seems fair, a good way to increase revenue into the country. But a lot of people think that it's just crazy, but to me, that seems like common sense. One of the things that is not bullish to look at is the M2, right? The global liquidity index. So M2 growth of the Fed. What we want to see is the global M2 increasing. That has always led to bull runs in the past. But what we're seeing now, since essentially Trump came into the office, is a decrease in global liquidity. Tightening of markets. We know from the show previously that we are looking at potentially coming toward an end of quantitative tightening. Hopefully that leads to easing, which would increase global money spending. But for now, this is not a good sign. So as you can see, Sandra from Kaito points out that where the market is at in the crypto market is people are sidelined. They are coming into stable coins. They're not sure what to do. They've got a lot of fear, uncertainty, doubt about the markets. And so they'd rather be in the stable coins on the sidelines in case the market takes a dramatic drop down. Then they can buy back in lower with the stable coins. And if it continues, if they get more clarity on the direction of the movement upward, they redeploy stablecoin, even if they miss Bitcoin at today's price of 86,500, where it is currently, and they have to rebuy back at 95,000 or something. To them, that makes a lot more sense than Bitcoin going down to 75,000 and them suffering those losses, for example, right? So that's where you're at right now. Now, to provide further bad news, yesterday saw a record-breaking day of outflows in the Bitcoin ETFs, 937 million and 539 million the day before. Now, let's not forget that we still have a total inflow of 38 billion. And I'm going to show you guys at the end of the video why this is happening. Now, the consensus seemed to have been the uncertainty around the trade wars and tariffs and all this kind of stuff that's happening, Doge, reduced government spending, but there's actually something else responsible for this, and I'll show you guys at the end of the show. ETH outflows not looking great either, $50 million yesterday, 78 billion the day before, and as Brett says over here, the crypto president himself has been a local top signal. You can see when the Trump coin launched, the market was at all-time highs, basically. And as soon as he entered office, we've been down only ever since then. In 2018, Donald Trump introduced tariffs. The crypto bear market started and had the worst bear market ever. February 10th, 2025, Donald reintroduced tariffs. Bitcoin hasn't touched 100K since. Is Donald Trump good or bad for your crypto? If he is, it's time to get your trench boots on or hope the Democrats make up another flu. That's pretty funny. Let me know in the comments below, guys, if you think that tariffs and Trump are good for crypto or not. One thing I'll add right now is the crypto regulations are just getting going. And like I've said in previous videos, but if this is your first time joining, you'll hear it for the first time. This is going to take time for this regulation to have clarity. What we do know, though, is the SEC has dropped all of the harassment and lawsuits versus crypto companies, and we're seeing a much more favorable administration. Now, a favorable administration doesn't mean much if you don't have liquidity and easing and more favorable markets for risk on assets like crypto, because crypto is still a speculator's market. We are not following traditional 4-year cycle seasonality. February was supposed to be the most bullish month ever. Remember, we've talked about that before. However, we're having the worst February so far since 2014, right? And even probably a little worse today. When you look at Bitcoin returns annually on a monthly basis for the past decade, essentially, I mean, more than that, 12 years, this is the worst one since February 2014. So in over a decade. Now, Trump has admitted to potentially having short-term pain. Let's watch this.
No, I'm not concerned. We may have short-term, some little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody.
So you can see short-term pain. Trump believes that the tariffs are going to help make up for this. Now, we will see, at least according to Grok, which is the Doge father's baby, what Grok has to say about the tariffs and how much revenue that could actually bring in. Let me remind you guys that Trump and everyone else would love, including us, we would love Jerome Powell to do interest rate cuts, right? Right now it's still high. But as we can see back from November 8th, 2024, right when Trump was elected, Jerome Powell had this to say.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
She is just stumbling on that one. As you guys may or may not know, the Federal Reserve is a private company, essentially, which is insane, that controls interest rates. But I do believe that's good for checks and balances, because if it was up to the president to decide if we want higher or lower rates, well, he would just say lower rates because, of course, that's going to pump the economy. Now, I do believe, like, Jerome Powell to me seems like a straight shooter. It seems to me like he's genuinely trying to do his job well. I don't know what side of the aisle he falls on. I don't really care. But I believe that he is doing what he believes is necessary in order to keep the markets, keep things in check. So as we see here, guys, Treasury Secretary Scott Bessent says Trump is focusing on to lower 10-year Treasury yields, not because he can't control the Fed. So if he had it his way, easily would just tell Powell to reduce the short-term interest rates. However, Jerome Powell won't do that yet, because inflation isn't where it should be, right? The Biden administration was essentially lying to us about where inflation was. And as soon as they left, we got the real inflation numbers, which were higher than we thought that they were, which forced the Fed to pause interest rates when we were expecting many more cuts to be had. Now we're not sure, leading to even more uncertainty in the markets. So I had to understand, why is reducing the 10-year Treasury yield rate important? And we'll get into that. But essentially what that does is it reduces a lot of rates in things like credit cards, car loans, mortgages, any loans for businesses, whatever. So when you can lower the long-term rates, then essentially you're going to have a more favorable economic condition. Now, what needs to happen for the 10-year Treasury bonds to be lowered, the lower rates? So the government will issue 10-year Treasury bonds and in order to borrow money. And that's what creates the deficit. So the US has had to borrow $36.5 trillion so far, mostly through these 10-year long-term bonds where countries lend money to the United States and they pay back at interest, which is the yield. So if there's less demand for borrowing, meaning that we can reduce the federal deficit, get down spending, increase national revenue, then there's no more need to borrow money, which means that they can reduce the 10-year yield, because reducing the yield makes it less appealing for lenders to lend money to the United States, right? And it also reduces the things that I've talked about: loans, mortgages, credit card rates, etc. It also makes loans cheaper for things like businesses to get small business loans and these kinds of things. So this is a really good post over here from Favium at Daddy Favium. So some people are wondering what's going on with the market right now and which way we're headed. Here's a little bit of an explanation. Nothing can save the crypto markets for now. The sentiment, the greed, and trust in devs and traders have been lost for now. It's a true bloodbath, giving off serious .com crash vibes. Why is crypto crashing? When it comes to the real market, the main reason why crypto prices are dumping and will probably keep dumping for the short term, there were plenty of signs that 10-year bond yields would surge. Higher yields equal lower bond prices. Yields rising quickly equal more expensive borrowing, tightening financial conditions. We just discussed this. Higher yields are hurting stocks, especially tech. Since the crypto market is essentially a speculative high beta tech sector, we're probably going to get hit the hardest. Why do bond yields matter so much? So to give you some counter perspective on when the yields rise, companies and individuals pay more to borrow money. Stocks, especially tech stocks, become less attractive as the risk-free treasury bonds offer higher returns. So people with a lot of money can lend money to the United States at a higher interest rate and make more money on risk-free returns, essentially. So they don't have to gamble so much in speculative assets or risk-on assets like crypto and stock market. They'd rather just take their higher yield and essentially the risk-free return on letting the US government borrow money. So crypto, even being riskier than tech stocks, suffers the most as investors flee to safer assets. The real fear is a liquidity crisis and a market crash. The biggest risk right now is that yields spike too fast. It could trigger a broader liquidity crisis and lead to a market crash, similar to what happened in 2008. If bondholders panic and start dumping bonds, bond prices will fall even further, pushing yields higher, which is a self-reinforcing cycle. This could cause financial stress on banks, pension funds, and corporations that rely on stable bond markets. What could stop the bleeding? The Fed. The only thing that could turn this around is a Federal Reserve intervention, but here's a problem. The Fed doesn't want to cut rates because inflation is still a concern. Even if they do intervene, it could create another set of risks, such as reigniting inflation and causing market distortions. For now, the Fed is stuck, markets are stuck with them. So long story short, we are effed. Now, the Fed could intervene, but also from this article, I'm not going to go and read the whole thing, but some of the economists that they interviewed in this story say what could also lower and create a more risk-on environment is essentially reducing the 10-year yield. To give you some other perspective though, annually, Bitcoin, even down 20,000 from all-time high, is still beating gold and stocks on all annual timeframes. So still better off being in Bitcoin than other assets as of now. We shall see what happens. Now, for some of the good news, we see that today, Senator Lummis, and so it begins. The first digital asset subcommittee hearing is scheduled this Wednesday. So today, I'm very curious, and maybe I'll cover that in the show tomorrow if it's interesting, what happened and what did they talk about at the digital asset subcommittee. Hopefully we get some more clarity. Hopefully things move along quicker. And hopefully we see something like a US Bitcoin strategic reserve or digital asset stockpile announced. And I don't know if it's too soon for that, but that would be fantastic news for our markets. And just something like that. So everything aside from what we've talked about today, all it takes is one incredible piece of news where Cynthia Lummis's plan to buy 200,000 Bitcoin a year is announced officially, and we're likely back into bullish Bitcoin markets. And this all goes away. It could happen, right? Something like this, but I do believe it's going to take a bit more time. But as you can see, after a sharp sell-off, long-term holders have accumulated nearly 20,400 Bitcoin. So in this dip that we've had since the weekend, long-term holders, diamond hands, have essentially accumulated all the Bitcoin that the weekends have been selling. Okay, so here is another interesting, brand new announced Trump policy. Let's listen to this. It is called the gold card.
We're going to be doing something else. It's going to be very, very good. We're going to be selling a gold card. You have a green card. This is a gold card. We're going to be putting a price on that card of about $5 million, and that's going to give you green card privileges plus. It's going to be a route to citizenship. And wealthy people will be coming into our country by buying this card. They'll be wealthy and they'll be successful and they'll be spending a lot of money and paying a lot of taxes and employing a lot of people. And we think it's going to be extremely successful.
So this is one aspect, what he said at the end there, right? So when we do this little exercise at the end, I incorporate and had Grok help me make some assumptions on how many rich people might take Trump up on this gold card offer to see what kind of revenue it might generate. Because the plan is, with the revenue generated, is to help close the gap on the deficit. But one thing that he said at the end that I didn't account for is what might be the more mid to long-term benefits of bringing in highly successful, highly wealthy people into the United States, allowing them to have citizenship, allowing them to operate, allowing them to pay taxes, allowing them to build businesses and employ people. Could that also is a something I didn't consider. So let's keep that in mind as we go through this exercise as one more point, because the exercise does leave gaps right now in the logic that's being put out by the Trump administration. It could be because there's great intentions, but wishful thinking, potentially. But also there's things like this that we just talked about that I didn't consider in this kind of assumption and speculative process that we'll go through shortly here. Now, let's talk about what Trump has done so far that has been positive to take into consideration when we think about, is Trump good for the crypto markets or not? A bunch of people are saying you deserve a sell-off because you elected the Cheeto Hitler and bought his meme coin. But what actually has happened is Trump administration ended Operation Choke Point 2.0. We've seen that with the SEC removing all lawsuits and stop going after crypto companies. 2 bills moving through Congress to support crypto already. Total overhaul of the SEC. Pro-crypto appointees, the SEC, Treasury, Commerce, CFTC, moderates in the OCC and the FDIC, all pro-crypto. We have essentially a very pro-crypto White House right now. Created the role for the crypto czar, David Sachs. Banks allowed to touch crypto again. Day one of EO on crypto. I don't remember, what does that mean, EO? I don't know. Let me know in the comments below if you know what this EO is. End of litigation against Coinbase and other major crypto firms. If you're making a living in crypto and you're taking a victory lap about the sell-off, you are completely deranged. Now, to give you some more perspective on where we are in global adoption, we only have between 3 and the chart I showed the other day was 6% of crypto and Bitcoin adoption around the world. So we're somewhere between 3 and 6%. But on the adoption curve, we are still extremely early. And that's why I still think that Bitcoin, no matter if the price is 85,000, 75,000, 100,000, I still think in the grand scheme of things, if we're looking at long-term wealth building, Bitcoin is still the best option. Even Eric Trump, Donald Trump's son, just yesterday said, buy the dips. Is he trying to tell us something that we don't know? I don't know. 11.1 million views. Now, this is just a message. I actually am recording this after I made the video. Listening to the Trump cabinet discussions that are happening right now, it made me realize that there are a lot of things that I didn't include in this current AI breakdown of the promises and things that are being talked about as far as, Doge, tax cuts, revenue generation, things like tariffs, the gold pass, these kind of things are just a small subset of things that the Trump administration is planning to implement to, hopefully slash the federal deficit and turn that into either break even or hopefully even by the administration, a surplus. Some pretty extreme things need to happen. Now, in the exercise we're about to go through, this will be part 1, and we'll make further videos as more details and more things come to fruition. Things like the potential take back of the Panama Canal, which generates billions and billions of dollars a year in revenue. Things like acquiring Canada as potentially a 51st state and the revenue that might generate from things like oil production, water, electricity, whatever else is produced in Canada, plus combining those taxpayer dollars. Things like the deal that are being made with Ukraine right now, and the $350 billion that was sent to Ukraine being repaid in the form of rare earth minerals. And now that deal could potentially be worth, hundreds of billions, if not trillions of dollars. And there's many more things happening on a daily basis that will not be accounted for in this exercise. So guys, with that being said, let's get into this exercise right now, because it's a good first step to see if it's feasible to do things like abolish IRS, big tax cuts, and if Doge and tariffs alone are enough to offset the hemorrhaging federal spending and federal deficit. And also, we will make more videos in the future as things develop to keep you informed on the economic outlook of the United States and if it's good for crypto and stocks. So now is the kind of fun part, right? And let me show you what I've done here. So my initial prompt was, can you please create an Excel sheet to show me how much revenue Trump's new gold card program can generate for USA? In case you haven't seen it, it's $5 million per person who wants to become a citizen of the United States. Show me if 100 people, 1,000 people, 10,000, a million. I should have included 100,000 as well. People take this opportunity. Additionally, show how much revenue would be made by the drill baby drill if USA produces and sells additional, I said 300 million, but I went back and found it was 3 million. The goal that was just announced is to produce an additional 3 million, not 300 million barrels of oil per day. So after coming back, what I also did was I included a snapshot of the US stat clock, this one over here. And what we took into consideration, the additional 3 million barrels of oil per day produced by Drill Baby Drill, America's dominance on energy. We took into consideration the goal of Doge reducing federal spending by $1 trillion. We took into consideration assumptions made on how much revenue the gold card program could bring in. And we also took into assumption the amount of revenue that the tariff program, reciprocal tariffs, could bring into the country, additional tariff revenues based on the major trading partners. I uploaded the picture of the debt clock and I asked it, try to figure out if we could achieve at least with these new things proposed, if we could break the deficit, right? The $2 trillion annual deficit that we have right now. And there's a lot of logic behind here, but basically what it came down to, and if you guys want to, you could pause at any time and scroll through this and see how my logic was. But I was pretty thorough. I went back and forth quite a few times. And these are the assumptions that we came up with. So how much could be generated from the gold card program, right? And we made the assumptions based on how many millionaires and billionaires that were non-US that could actually afford $5 million. So we had to, out of the 65 million global millionaires that were non-US based, you had to only assume the top 20% of those, because obviously you're not going to probably pay $5 million if your net worth is $5 million, or if your net worth is $10 million, you're probably not going to pay that. So the assumption was made that people have $30 million or more were more likely to exercise their option to take this. And maybe that number is a little bit lower, but we made some assumptions over here on what is the realistic or optimistic. And I didn't have, the number could be somewhere in between here, right? And so it says realistic midpoint is 2,000 people take this opportunity and generate $10 billion worth of revenue. Optimistic is that, 10,000 people take this opportunity and it generates $50 billion possible. And then unrealistic for deficit closure is 75,000 people and $375 billion are generated. So when doing this, I didn't take into consideration the long-term knock-on effect of these really successful people coming into the country and creating businesses and jobs and stimulating the economy and spending money and buying houses and, these kind of things. So it's definitely something to consider. And there's many other things that maybe aren't considered here. And I would love for anyone watching this video to let me know in the comments below what's missing from these assumptions. I did ask Grok in the final prompt to also tell me where other revenue might be generated that I missed from these major things. And of course, policy is still being made, right? And so we don't know what other kinds of major things that he might introduce to incentivize more money to be coming to the country. I also asked Grok if a 50% tax cut could be feasible or reasonable and still kill the deficit and make us have, either have us come to break even or even a surplus, an annual surplus. So how much revenue is being generated from the oil generation? So there's currently 13 million barrels of oil being produced in the United States. An additional 3 million barrels would put us at 16 million barrels a day. And Grok is assuming a price of $70 per barrel based on the trends and 365 days per year. So that would bring in $408.8 billion in oil revenue annually. Now, looking at tariffs, there was major trade partners were the China and EU. Because the tariffs are higher, reciprocal tariffs would generate a reciprocal rate on average around 15%. So that would bring us to annual revenue, including other countries. So China, EU plus others, and others were actually lower than the rates from China and the EU are the highest. And so total revenue from tariffs coming in at $164.7 billion. Now, when we look at the summary table, we can see revenue currently is $5 trillion, spending $7 trillion, deficit currently $2 trillion. If Doge can successfully reduce the spending by $1 trillion, that would bring us from $7 trillion to $6 trillion. So we'd have a deficit of $1 trillion still. So it brings us from $2 trillion to $1 trillion if Doge can successfully achieve its goal of a $1 trillion deficit. Now, revenues in US dollars would bring us to almost $754 billion. Now, this was suggesting that there was a tax cut of 50%, which makes this whole thing unreasonable. So talking about abolishing the IRS, that's highly unlikely to happen anytime soon. However, tax cuts are likely to happen. We'll see what that is. But I was trying to see if you could do something like abolish the IRS or even cut federal income taxes by 50%. And this seems highly unlikely. So to give you a conclusion, Doge plus revenues reduces deficit to $753 billion, but no surplus without extreme measures. So this is even not cutting federal taxes at all. Still, it's better than a $2 trillion deficit, but still puts us at a $753 billion deficit. Now, if we did tax cuts, it would be even worse. Than if you tax cut by 50%, you'd still be at a $2 trillion deficit, even with the offset of what Doge is doing and all the excess revenue we talked about. Now, some assumptions that we didn't do is missing revenue. So focus on corporate taxes, estate taxes, or growth-driven increases. But 50% income taxes strains feasibility. And so that's our short little exercise that we went through. Try it on your own. Grok was extremely good at going through this stuff and play around with different things. Let me know in the comments below, guys. I'm generally interested to see what kind of outcomes you might come out with, to see what is reasonable that's being promised by the Trump administration and what is more realistic. Now, with that being said, is the Trump administration really responsible for what's happening in the crypto markets? No, it's not. And so this was a really good clip that just happened a few hours ago from Scott Melker. Listen to this. He's interviewing Matt Haugen from Bitwise, which is one of the ETF issuers. Let's listen to this.
Bitcoin ETFs see record daily outflow of over 930 million as carry trade loses shine to the 10-year Treasury note. So almost $1 billion in a day. I think there was 500 million collectively across all the products Monday and 500 million last week across all products. So this is specific to Bitcoin. But they actually, I think, nailed it here on CoinDesk, which was going to be the point I wanted to discuss, which is this is likely largely the carry trade unwinding.
That's exactly right. You have to think of ETF holders in really three buckets. There's hedge funds who are doing the carry trade. They're buying the ETF and then shorting the futures. There are institutional investors who are long only, and then there are retail investors who do a large amount of things. Based on what we can see from our internal flows, from our customer conversations, et cetera, this looks like it's that top third that's really coming out of the market. The size of the carry trade, the profitability of the carry trade has just collapsed over the last few weeks. And as a result, those people are exiting the market. These other two buckets, institutional is doing great. We're still seeing that.
So guys, if you didn't watch my video yesterday, we did talk about this Japanese yen carry trade unwinding. And if you don't know what that is, I made a whole video on that, and I will link it in the description below or add Ed screen at the end of the video where you can click on that and learn more about the Japanese yen carry trade. But essentially, the TLDR of it was where institutions could borrow money from Japan essentially at zero interest, and they could put it in the Bitcoin ETFs. They longed that opportunity, and now they're seeing more attractive, safer opportunities and higher interest rates from Japan, and they're reversing that, and they have to repay the borrowed money from Japan. So they're selling the Bitcoin spot ETFs to repay the loans as interest rates are rising in Japan. This is literally what is causing the ETF outflows and what is causing turmoil in markets, in my opinion, the most right now. It's not just in crypto, it's also in stocks, right? So this Japanese yen carry trade wasn't only longing crypto Bitcoin ETFs, also investing in more speculative assets. Remember, a lot of people aren't comfortable with Bitcoin, so they would want to take the yen carry trade opportunity as well to invest in the stock market. Guys, I put a lot of time in this video. I hope that you found it very, very valuable. I would appreciate it if you share with friends. If you're new to the channel, it would mean a lot to me if you hit the subscribe button, hit the bell notification to get all notifications when I produce new videos. I will catch you guys in the next one. See ya. During Trump's first term, he basically...